Hey, I'm Matthew Ma. Welcome to the Truth About Real Estate podcast. And today we're talking with HomeRoom co founder Michael Tich. Mike was recently added to Forbes 30 Under 30 and is now the co founder and head of growth at HomeRoom. He's elevating the HomeRoom sharing concept to a new level using technology. Excited to talk to you, Michael. Thanks for being on our show.
Thanks, Matt. How's it going?
It's going great. Yeah, I really want to talk to you and learn more about you, what you do, and how you got into real estate. You came from a tech background. Working at Airbnb, working at Facebook, and you guys built out a homeroom. So I really want to start off to like, what made you get into real estate?
So I really just started investing in it back when I bought my first primary house back in 2015. Was like, oh wow,
Nice.
like this has been such a great investment back down in San Jose. So we were looking for more investment properties, right? So I found this cool little 3 bedroom that had a bit of an iffy backyard and did a lot of like construction work and everything to make it just like really nice like co-living space in San Jose. Um, so yeah, it ended up being like a 5B, renting out by the room. We could just make a lot higher returns that way. So that's how I personally got into it. Still looking for more like personal investments as well. But yeah,
Nice. It's always a lot of fun to, find more personal investments, get into real estate,
yeah,
start seeing the real value of, being in real estate and
yeah,
how you can get that kind of like passive income with some active management. And
yeah,
then, the things like house hacking and really building it up and seeing that wealth, because, when you think about passive investing, you're creating wealth without really having to work. You're being able to sleep at night and, make money.
yeah,
So, you came from a tech background too. And you
yeah.
mentioned
Like
before
personally, I don't think
Airbnb.
it's that much work to self-manage it, right? So like,
It can be. Yeah,
I
not too
live
much.
close, right? I live like 20 minutes away, so anything goes wrong, I just like pop over there and like fix whatever needs to be done. It's usually not too bad. Um, but yeah,
Yeah, exactly. It's just, for example, the amount of work is really correlated. Like the amount of work you're
yeah,
doing for it is really not that much for the amount
yeah.
you're really getting because it's
Mhm.
recurring residual income for a long time, right? So the work you do,
Yeah.
but people feel overwhelmed. I don't want to change a
Yeah.
toilet. I don't want to deal
Well,
with
the Bay
tenants.
Area doesn't really cash flow that well. Like this place, it took me forever to find, and it like breaks even, right? So it's like, but the appreciation's absurd. So there's pros and cons. So yeah,
Cash flow can be dependent. I found a lot of properties in the Bay Area, the cash flow really well, but
yeah,
you really got to be really savvy buying
yeah,
it, knowing what you're getting into and how much work you have to do upfront to get that number. But it's not
exactly.
an
Yeah.
easy task.
4 years
But
ago, it was easy,
Mhm.
right?
Yeah.
But like even then, right? Like, um, I think it was like a 7% gross rate, right? Which is like slightly over break even, but it's
Mhm.
like now, good luck finding anything above 5, right? So, um,
I found stuff in the 7s still, but at the
yeah, yeah,
same time, we're still gonna be doing a lot of work to
exactly. Yeah,
add value to it, but it's still in the high numbers.
yeah, yeah.
And then I think my highest one in the Bay Area is 12,
Oh, nice. Yeah,
but that's
yeah.
not
It's
easy it was not easy to obtain, it took time.
yeah, yeah. We put in 11 offers over the course of like 8 months, and like just had to keep grinding it, and eventually you find something that people miss, right? So,
Yeah.
uh,
Part of that
yeah,
too is really like, okay, looking in the Bay Area, looking out of state, looking at the numbers, seeing what makes sense for
exactly.
you guys and how to scale it up. So let's talk about that too. Before you came into real estate, you worked at Airbnb, right? Like, how
Yeah.
did you get into working at Airbnb?
Yeah, so I was, leading, like, growth marketing in this other smaller, like, YC startup at the time,
Okay.
um, and it basically just completely went out of business, and then, like, I knew some people from that, made some connections at Airbnb and, like, kind of referred me for a job there, um, and then just, like, went through the whole interview process there, so, I was on the, like, host side of things. My
Mhm.
startup was actually doing, like, iPhone repair business technicians, but, like, the only part of that business that worked was sourcing technicians. So it actually had a lot of parallels to what I did at Airbnb, which was just finding people that might want to invest and host it on that side of the business. Um, so did a lot of paid ads at Airbnb. We did a lot of like Facebook advertising. We did a lot of like random hacking stuff. Like we did like direct mail ads. We did a lot of like random Google stuff. Like there was a lot of like keyword stuff that was like really surprising that worked. Um, like and all these like small scale things that kind of just added up, right? So like
What do you since we're talking about that topic of growth
mhm.
hacking and marketing, when and you're doing all these different kind of experiments, what do you find in that really work? What part of that technology and part of it helped with the marketing, with the growth that you find useful for real
Yeah,
estate?
I think just understanding like who the customer is you're going after, right? And just like you run through a bunch of different ads, right? And trying to come up with a story and a narrative behind like what that is, right? So one thing I've noticed with homeroom is like the ads that work are like not like what you would expect, right? So like you can make very pretty brandy ads, but they don't usually work all that well. The ones that usually work is just showing people like real numbers, real data around like okay, what our investors are seeing, right? Because like our numbers are pretty good, and like especially for like how hands off it is um, in like some of these Midwest cities, right? That it's just like just show people like a really ugly Excel spreadsheet, and like that just works better than anything else I've tried. So um, yeah, that's kind of like one major thing I've learned there is just understanding the customer. Like if I didn't understand like, oh, like real estate investors are like mostly in like technical fields, they understand a lot of that hard data, really just want to see it. Like getting to that conclusion and being able to iterate on that can sometimes be difficult, right? So
And then when you're doing, like, for example, you're looking for a specific clientele to work with investors, and you're looking at the analytical side of the numbers, and this is what they like to see. And when you start building up your business, how did you like? What kind of marketing? You mentioned a couple of things, like okay, online marketing, social media, showing them the truth of the numbers, and it doesn't have to look pretty, and that works. What else? Did direct mailing work? Did newsletters work? Did calling work? What worked better?
none of that other stuff really worked that well for us. So it's like direct mail kind of wasn't when I we tried it at Airbnb even like you got some hosts, but it just
Hmm.
didn't get like nearly the amount it needed for the cost. Same thing with like LinkedIn and a few other more like high expensive touch channels. Like if we were selling like $100,000 luxury condos, yeah, maybe it would work for that niche. But most of the time at Airbnb, we were just trying to acquire like regular hosts that either had extra bedrooms or had maybe one or two investment properties. And then like it just like the LTV wasn't high enough for what it was like for the cost, right? So um, ended up not that didn't work all that well. Mostly what worked was okay, like with like referrals were huge, right? Referrals was like almost as much as all of our paid marketing at Airbnb, right? Like it was kind of huge. Um, like pay was decent, right? And then just like yeah, just finding ways for people to get through that flow as quick as possible. Like exposing all the potential guests that maybe would have extra spaces to becoming hosts was like also like another huge channel that we had a whole like 10-person team on, right? Of like where do you actually tell people about hosting? Where do you like send them emails? When do you send them push notifications, right? Like how can you automate like oh, this person maybe is like looking at the host site or spending more time on some of those banner ads, right? Can we like do things like calling them up from like one of our international offices, right? So, um, yeah, getting people on the phone is kind of what works at home, right? So, like our entire marketing strategy is around like just getting people to talk to us, right? Because um, that is usually the only way people are going to like buy like an investment home with us, right? So, um, the goal is just to get people to set up meetings. They'll talk to like either like our head of sales, like myself, or like Johnny, the CEO, right? So it's like we're still a relatively small company and can provide like some decently personalized level of service there. So
Isn't that hard though? Think about it. Like, for example, you came from Airbnb and then you guys built this company. But like, if you're cold calling and talking to people, even if it's a referral call, it's still harder because one is like, okay, I'm
yeah.
making a call, trying to get to know, if they're picking up
Yeah,
the
we
phone
really
first.
don't do cold calling much. It's
Okay.
mostly like calling once they already have expressed interest in the whole business model,
Okay.
right? Or like we'll just actually have them go and set up a meeting directly with us, right? To be
Mhm.
able to make sure that they're like actually interested in the product, right? Because
Okay. Okay.
um,
So let's back it up from there. How did you guys first get them started to become interested to learn more?
yeah, so that's why we just like sometimes we'll just randomly on Facebook ads. We do things like podcasts, right? We do
Mhm.
things like write a lot of blog posts around it to try to put a lot of information out there, right? And
Mhm.
get the word out, like get the word out of what HomeRoom is doing and this type of thing. So
So do you
I
find
would
the
say even
Facebook
with all
ads?
of that, like Facebook is still like 70%, right? So
So you think Facebook's still 70% of the way to build the online leads generation coming in? And why do you find that really valuable? And even with today, for example, let's jump into today with iOS 14, privacy,
yeah,
more privacy,
yeah.
less targeting. How do you find that working with Facebook ads?
Yeah,
Um,
so I mean, I think one thing that like Facebook is pretty good at just like automatically like being pretty smart about trying to find people. iOS 14 has definitely made it harder, especially when I worked at Facebook. It was like a massive issue of okay, Facebook is just going to miss like a lot of conversions up to half sometimes, right? So it's like maybe your Facebook CPA is like even if it is high, right, and you just break even on those CPA, like on the cost per acquisition there, right? Like maybe it's like $100, right, per meeting. But you actually get some residual amount beyond that, right? So you'll get something like Facebook can't track that we're pretty sure it comes from Facebook traffic. because like when Facebook traffic turns off, those also stop. So we also ask people where they hear about us on every call, right? So we can usually gauge like, oh, Facebook is saying they only drive 40%, but it's probably closer to 70, right? So we do a lot of that. Like it's easy to do when you're relatively small. When you scale it, those type of models become increasingly harder to automate. Um, Especially if Facebook's not 40% of your traffic, right? Like if they're not saying they're 40, if they're saying they're 3, that's where it can become really hard, right? So like when I was at Cameo, it was like very difficult to make those type of like decisions of how much it's actually driving. We had some pretty sophisticated like media mix models that try to do that, but that's getting in very much into the technical details of digital marketing. So I don't know if how much far down that rabbit hole would be interesting for your audience, but
Yeah, we can talk about that too. It's really, like, okay, understanding client acquisition and how to really find the clients to work with, and like, how are you targeting them? How do you help them? And how do they, really once they start clicking on it and filling the forms,
yeah.
there's different marketing scenarios. And I guess what I want to ask is this too, like when you do a Facebook ad, are you guys doing like a form, a messaging? And then once they do that, like what does a lead funnel kind of look like? And how does that kind of correlate versus like what Airbnb did, what people do at Facebook do, what people, general marketers do? And what do you find is kind of the
Yeah.
best method for you guys?
Yeah, so Airbnb was like fully automated, right? So you could just go and fully like place your own listing, right? So they would never really ever talk to anyone.
Mm.
Um, in the early days, it wasn't like that. Like in the early days, you had to like the founders of the company would call you and like get your listing set up for you because it like wasn't that easy to get it set up.
Yeah.
But eventually, like over time, you slowly automate that process like a tech company, right? So right now, it's still like a sales process is still pretty just manual and talking to people. Like eventually, maybe we can have like, oh, people will directly talk to the agent, right? And we'll like he will immediately start sending you deals in a particular market, right? And those type of things to be able to like automate some of that. But right now, yeah, our process is fairly long, right? So we'll go if people set up a meeting with us, then we'll set up a meeting with the agent and the markets you might be interested in, and then help you buy the house and then do all the construction work and then everything down funnel, right? So it's still a pretty relatively hands-on process. I don't know if it will be like 5 years from now, but yeah,
So it takes a lot of time to, really build a company, a tech company. And then at the same time, you guys are doing two different things. If you think about it, like one side's a business side and the tech side of building all the systems, processes, automations,
yeah,
and resources with your team, and trying to get rid of some of the manual labor to do better acquisitions quicker. And
yeah,
then the second side of it is really the real estate side. Buying real estate, investing, adding value,
yeah.
getting it rented out, managing the financials on that side of things. So it's like a lot of work because you're running
Yeah.
two different things at the same time, and they
Well,
correlate.
we don't really buy the properties ourselves, right? So that's kind of what
Yeah.
we do differently is we just the investor side is what we partner with, right? So
Hmm.
we're like we let them take care of okay, like making sure we set them up with lenders and getting pre-approvals and make sure the finances work, but it is ultimately up to them to make sure that like the numbers work for them. Like we will run like some pretty complicated pro formas on all the properties we recommend and all that, right? But um like generally it is on the investor to decide, okay, like is this a good investment or do we want to like do they want to buy this property or that property or we just want to be like a marketplace for okay, this is where we can identify properties and make it easier for you to actually like turn them into a higher cash flow asset.
Nice. And, like while we're diving in, we're going to really want to start talking about the tech side and talk about the real estate side and the numbers and like figure out like, okay, how does it help the investor really grow? So, for example, when you guys were building this business up and you guys started focusing on acquiring investors to work with you guys, and you have the marketing pieces, you're doing a lot of referrals and you're also talking in terms of like building out the digital marketing process of it, the technology side of it, how long did it take to start raising capital, and working with investors, running the numbers, and showing them that hey, realistically, buying this property, investing, renting it out, this makes sense. It makes better numbers than just general market doing it yourself.
Yeah, yeah. So I mean, I think what we generally see is that when it comes to like, yeah, self-managing, we
Mhm.
will well, I personally self-manage my properties, right? It's relative like I like doing that in my local area. I don't know when I try to go out of town, right? Like it can become pretty difficult to just manage some of those things. And it's just like finding someone to repair things in the middle of the night, right? It can be a bit of a pain. So that's where like what we've noticed with HomeRoom is it becomes very difficult for people to remotely invest, right? So and like sometimes just finding a trusted property manager on the ground can be difficult, especially if you don't already invest in that market. Um, So we just want to be like a one-stop platform to find and to be like a trusted partner in each one of these markets. So if that makes
And
sense.
then when you're working with investors, the same principles come into mind. Okay, there's a lot to deal with, like you just mentioned, working with other vendors and services, and like even for you guys, like how are you guys helping these owners coordinate that work, or are you just helping with the rental side of things?
Yeah, so we help coordinate the entire process, right? So
Mhm.
everything from like finding the property, purchasing the property, doing the construction work, and then eventually getting it rented. Um,
Is that
the
manual labor
construction side, I
still,
think,
or
is where we do a lot of value add, right? So we'll have a construction partner in each major metro we work with.
Mhm.
Um, we'll also do like the design work, right? So we'll say, okay, like it's currently now a 3 bedroom, 2 bathroom. We think, okay, we can rent for a bunch more. We turn into a 6 bedroom. Here's exactly where you'll put the walls. Here's how the construction company should do that. And we have like a lot of experience to do that relatively quickly, right? And like um, before the like property even closes, we'll have all those type of things planned out. So um,
And with that in mind too, like, are you guys running in your platform, running systems and processes in the platform where vendors can connect with yourselves, with your team, with the owners, status, give them statuses, updates, everything on it, and work with all the different kind of providers and make it as
yeah,
simple as
exactly.
possible?
So we generally it's still a relatively manual process on that side of the business right now, but we do have a people can enter in, okay, like what are the repairs to that given month on a given property, and we work with the owners right there for those type of things. Um, Yeah, a guy named Billy from like he just joined us in Mind. He was like he's been managing that whole process of okay, like how do we organize the construction teams, and share that information as soon as possible with the owner, right? So it's still like it's not 100% software driven on that side yet, but I think like it is the vision of the company that we can use a lot of software to just make all parts of this like experience a lot better. So
Nice. And then, for example, how much time is the owners really putting in when they're helping with everything? How much time are they putting into everything they're doing versus them doing it themselves?
Yeah, so doing it yourself, I mean, it'd be quite a bit of work, right? So you'd have to like okay, put up the walls, find the construction company, do the design work, and then like doing all the leasing, right? So some of our metros, it's like not ridiculously hard to find tenants, but it's definitely harder than it is in like the Bay Area. So
Mhm.
we have a team of like international people that help us list on like 27 different platforms. We automate a lot of that process, right? So we want to make it go from like, okay, this is like a part-time job to like maybe like I don't know, like
Yeah.
an hour a week of just like where you barely even think about it. So, um,
Nice. And then how many properties do you guys currently, or how many investors are you currently working with, or how many properties are you working with right now?
yeah, it's around like 120, 130 properties, about 80 to 90 investors so far. Growing pretty
Nice.
quickly, right? So a year ago we were at 30, right? So it's been like a pretty like the growth has been accelerating for us quite quickly.
Yeah.
And we're always on the lookout for okay, more people that might want to potentially invest, right? And like even if it's not in one of our target markets, like we've gone from like 2 to 3 markets to 7 now. So and we're launching 2 or 3 more in the next like month, right? So um there's a market people might be interested in potentially like partnering with. Yeah, feel free to reach out. So
Which markets are you currently in right now? Which 7? Which ones did
yeah,
you
so
start
right
with
now
first, actually? What's the first
yeah,
3
we
you started
started
with?
in Austin, Kansas City, and Dallas. We
Okay.
just added on Indianapolis and Pittsburgh. Um, we are launching Tampa, and they like like basically the next few days, and we launched San Antonio maybe about 6 months ago. So
And I know some of the audience would ask you too, like, how did you identify those specific markets and like why?
yeah, so we looked at markets that had generally a high level of okay, people moving in and out of them, just because that usually makes it a lot easier to find existing tenants. We also looked for people like that have a good amount of like young people living there,
So
just because like our
net
target
immigration and growth,
base is like 18. Yeah, those are the main two. Like yeah, population growth rate, especially in young populations, and just immigration data.
and then
Um,
median income levels going up too?
I mean, I think that's not as important for us, right? Just because like our tenants are people that can only need to be able to afford like a $500 or $600 rental, right? So it's like we don't go in like we don't really compete with like the Section 8 level, but we're like only like one level above that, right? So they don't
Mhm.
need to be making absurd levels of income.
Okay, okay, nice.
Which also opens up like a lot of markets for us, right? So our competitors are mostly in like the tier one markets,
Mhm.
um, which is just really expensive to buy real estate there, right? So like what we do is we open up the ability for you to take that model and actually get a higher return out of it in some of these tier two or tier three markets. they might not have some of the like very high level of income. So
And then when you first started out, you think about, okay, you added the first 5 properties and then you had 10, 20, 30. Did you run into any issues scaling it up, and owners, like how are they doing? And then like how are the numbers looking as you guys grow with the business?
yeah, there's always like scalability issues, right? Especially in like the winter months, right? December and January are always like difficult to find tenants, right? So it's like we managed to hold pretty good at like having like about a 92% occupancy rate across our properties, but it's
Nice.
like it was looking like during the summer we'd be able to hit like almost 100, right? So it's like it can be frustrating sometimes of like, oh, it trips a little bit. We just have to like hold on and try to do it. Like this is part of like just being really hacky to find tenants.
Mhm.
And we've been pretty good at being able to scale some of that up, right? Just because like we have such a large international global team to just help us list on all these different types of places, right? So um, if people are looking, they will almost always see us, right? So
Good. And it's different, similar but different than Airbnb. But like how Airbnb, they grew really fast, rapidly. It's like a unicorn too, right? And for you guys, homeroom, you guys are building it up and scaling. Do you guys find it pretty parallel to Airbnbs, but at the same time you're doing renters rather than guest hosts?
that's the goal. I mean, I don't know if we're going as fast as Airbnb right now as they were, but I
They
mean, we're
start a
going
different
pretty
time
quickly.
period.
I mean, like they were growing like they were almost doubling every month, right? Like we're growing
Mhm.
like up like 30% every month, which is still like a lot, right? But like it's not like absurd levels of growth, right? But like I think we'll
Yeah.
eventually we do see it accelerating quite a bit, right? As we onboard new hosts and or new board new investors, right? So
Yeah, and I think during the time with COVID too, the hard
yeah,
part about it is to finding enough resources, enough vendors, enough
yeah,
materials, the cost, the shortage of everything makes it so
yeah.
much harder. But the fact is, people still need to live no matter, and they need
I
to
mean,
rent and they need.
that's where we saw our business actually start going up, right? Because I think we
Yeah.
saw like investors, like it just became a much harder problem. Like before COVID, maybe it was like a little bit easier to manage some of these things, and we just saw a lot more interest from investors of just like, oh, maybe there's a service that like, oh, you pay a little bit more, where they can just manage this whole like much more difficult process, right? So,
Yeah.
um, yeah, COVID was weird for the industry, right? Like for 3 months, it was like really, really bad. And like 8 of the like co-living companies went out of business, right? And like, well, it wasn't that many to begin with.
Mm.
Um, and then like it really just kind of took off. Like for us, like I mean, I don't know if it did for our competitors, but like for us, it really took off like maybe 3 or 4 months later. So
Nice, nice. And then, you guys started scaling the from 30 and up. I'm sure as a business owner, you got to hire a lot of workers to help. You got to manage all these new properties now, manage all these investors, manage the financials, manage the tech side, the vendor
yeah.
side, and then the tenant side. How do you guys handle that challenge? And like, how do you recommend people who are growing their business, really lean in and like grow with the growing pain of things?
Yeah, yeah. Yeah, so Johnny, as I said, I was kind of part-time just running all the growth channels for the last year, right? I think Johnny dealt with that much more than I did, like our CEO. Um, but yeah, I think just hiring good people and just making sure you trust them to do their job, right? So we hired some like really good people to run the operations part, to run the leasing section of the business, right? To run like the sales side and the top of funnel, right? So being able to trust them to do their jobs there is kind of the most important thing. So uh,
Nice. That's true. Yeah, it's always about having the right team to really grow the business, because once you find the right people
mm,
to work with, it makes it so much easier
yeah.
because you can trust, depend on them, and they can share their expertise in the areas to help it grow.
Yeah. Well, it's just like we're also just so busy that we kind of have to. So yeah,
What did you guys do on the tech side of things to grow
yeah.
from 30 up to 100 plus?
Yeah, so we just brought on like a CTO to sort of really accelerate some of that.
Mhm.
But like to be honest, not like we were able to grow without that much being on the tech side to start. Um, we obviously do a lot of to like okay, identify properties, right, and finding like where like what property makes sense from like an ROI perspective. We'll check pretty much every house that comes in the market and like the target areas we're looking to find new investors. So that's kind of the like the first thing there. We've like have a new website for the leasing side of the flow, right? So we have like okay, a very Airbnb style website and Airbnb style checkout flow, the ability to just like book a lease online or like very easily. So there's a lot of tech pieces that have just really come online in the last like 2 months that have helped out a lot of just like, okay, how can we just make this like a product from a tech perspective, right? So um, That's kind of definitely our next stage of growth now from where we go from like, okay, like 100 to 1,000, right? That's where we're
Mhm.
like, we're gonna have to lean even more heavily in some of those tech pieces to automate some of that. So
It's nice because, like, for me, I'm a tech guy too, and I love the tech side of things because when I think about it, simplicity is the hardest thing to do. Make it so simple and easy to use, like Apple or like IKEA, for example, right?
yeah,
Try to make it simple so anyone can do it, but do it fast, like Amazon. It's
yeah,
like, how you think about instant gratification nowadays, like Amazon, one click. I can buy this thing, it'll be in my house in an hour. That's crazy. Imagine the
yeah.
logistics behind it and the technology behind it to make that happen.
Mhm.
It's not as simple as most people think it is, but it's
Yeah.
crazy how well they can do it that way.
Yeah, exactly. Yeah. So like for example, we just like launched yeah, one second. I can share my screen real fast.
Yeah.
Um yeah, we just launched this new website like last like maybe actually I think it was like 2 or 3 weeks ago, right? So basically for the mostly for the tenants, right? So you can very easily just enter in okay, your zip code, you can see okay the different type of properties we have available. Um you can kind of zoom in on the market. We're still trying to improve like the auto zooming functionality, but it's very much a, like a Airbnb style interface, right? So it's like, okay, this house has like maybe three beds available, right? So, um, yeah, we have a lot of houses in Kansas City, right? So like most are fully booked, but we also have the most availability there. And like yeah, Dallas, it's like there's a lot that are fully booked in the central Dallas area. We have a few still left in like this one only has one room out of maybe like 6 or 7, right? So um, yeah, it's like we're doing a lot to actually, okay, how do we just like find more houses in some of these areas that we're renting out like really, really quickly? Yeah, like if you check Austin, I believe there'll be nothing there.
Nice. That's good. You rented it all out
Just-
quickly.
oh yeah, it just airs out. So like literally Austin has like every house like completely full. So yeah.
So too, like when you think about this too, and on the real estate side of things, you have these properties and you're helping these investors with the properties and finding the tenants. Are you guys also you're outsourcing, for example, photography, videography, 3D floor plans, but at that price point, it might be a little different in the sense of how much services you guys provide and what do people do to really market the property? Let's talk about the listing side of things. How does that work?
So like how we actually market the property from like a listing perspective,
Yeah.
you mean? Yeah, so this is where we'll work pretty closely. Just okay, we'll list it pretty much everywhere, right? So there's like one thing we've noticed in like places like Dallas, Kansas City is there's not like one major channel. I
Mhm.
eventually feel like we're finding these type of co-living places. We would eventually would like to be that channel eventually, but for the time being, we just list them pretty much everywhere. So we'll list on Craigslist, Facebook Marketplace, like Roomster, Zillow, like pretty much like literally every site we can find.
Okay.
Like there's like micro Facebook groups and you like that we like list like there's a lot of stuff we do there to just like list it everywhere. So
So
um
one thing you think about that too is
the
like
top one only brings in like 10% of our leads, right? So
I think for
um,
me, like I find that Zillow brings in the most leads for rental leasing at least. Like Zillow has
right,
the
yeah. For
dominant
apartments,
portion.
yeah, but for like co-living, it can be like it's just a lot more long tailed in co-living, right? Where like
Yeah.
apartment living, I feel like apartments.com, Zillow, or like kind of two of the largest ones there. But yeah.
Okay. But the good thing about what you're doing too, if you think about it, you're technically building backlink channels back to your main website because you're
Yeah.
putting your site everywhere. And at the
Yeah.
same time, you're targeting certain demographics and people and in those channels and groups. And
Mhm.
then when they find your website, it starts becoming a household name over time because you guys are
Mhm.
always there and you're doing all these different markets. So hopefully by
Yeah.
that chance, the referral business comes in, the backlinks
Yeah.
come in,
Yeah,
they get
back well, SEO is always a tough one for me. Like SEO with Airbnb on the host side, it was almost non-existent just
Mhm,
because like very few people are searching for like rent my house, right? So um like if that's just not a thing people search for, there's not that
mhm,
much you can do on the SEO side, right? Like SEM, we could get a little bit like ridiculous, right? So we
mhm,
could bid on like rent my house on Booking, right? Or like literally like go directly after competitors or go like things that wouldn't even make sense, like Google login or something for some reason was one of our like random keywords because like maybe if they're like a company administrator, they have extra room in their house and they want to rent it out. Like there was a lot of like random stuff and good for Google SEM. But we're never gonna like rank on that for SEO, right? So
mhm.
um at
Let's talk about
HomeRoom, I
that a
think
little.
the goal is especially on the tenant side to be able like I think that's where it's like a huge thing, right? Of like, okay, how do we like build out pages, build out content, and like eventually get the backlinks there for a lot of those sub pages. So
Let's talk about that too. So,
yeah.
how do you guys define like what's SEM for people who don't know? What's SEM and like how do you
Yeah.
guys utilize SEM to grow?
Yeah. So simplified SEM is basically just like running Google ads.
Mhm.
So it's just those advertisements you see at the top of like the Google search results, or on like mobile, it's now like the entire first page. So it's like it can be a lot. So a lot of it is okay, like identifying keywords that people might be potentially interested in. So everything from like property managing related keywords, or like looking for people looking for maybe investment opportunities or those type of things. Um, and there's a lot of keywords in those different subsegments that make a lot of sense. Um,
Okay, so for example, search engine marketing, like do you find that Facebook ads do better or Google ads do better? Cost per lead, which is
well,
cheaper?
if you include the like branded search, Google's gonna be better. But like getting into like, okay, like is that actually incremental, right? Where like if people are searching for homeroom, like maybe they most likely will find us anyway. Maybe not because our SEO is kind of iffy, so we only show up at like the bottom of the first page. Um, Whereas like if you're Airbnb, like you're gonna have the first like five like
Mhm.
SEO links, right? So you'll get the top five organic links. So it just like it very rarely will make sense to just pay for those ads, because the customers are just going to come in via that organic link anyway. There's a lot of famous studies from like Amazon, eBay that have done a lot of testing there. There's a reason Netflix doesn't pay for it, and that they usually my go-to when it comes to like digital marketing. Um, but like non-brand is usually decently incremental, right? So people searching for like cool vacation spots in X city, or like cool places to live in X city, or like co-living in X city, or like all there's a lot of stuff there potentially on the tenant side, um, especially around like the city name, right? So um, if your SEO is really good, then your SEM will become less incremental over time. That is something we learned at Airbnb, right? So like um, once you actually start ranking for some of these keywords, like you just don't need to pay for them really much anymore. Um,
Nice.
and
And
like being able to monitor that over time can be tricky. So we had a lot of very complicated models at Airbnb that tried to do this, of like monitoring SEO performance on certain keywords and estimating incrementality of various things. Um, it was complicated. I don't know. Like the CEO basically complained in like at one investor meeting that said it was like that we weren't doing it that well. I thought we were doing like a pretty good job at it,
Mhm.
in terms of like us making sure we were incremental. I think a lot of it is just like COVID changes so much, right? So it's just like all your assumptions that went into those models before COVID just don't really hold. So you have to like rerun those tests, and like shockingly, the numbers are going to be very different, right? So um,
Yeah.
I think as the work comes out of COVID, it might make more sense again. But yeah,
I think it's very interesting the way marketing can work and how you can really generate a lot of business and
yeah,
define those through analytics is a lot. It's a lot of fun, actually. I think that's probably the funnest part of things,
yeah,
driving that. But of course, I know it's also a lot of work, and most people, most businesses, especially small businesses and small investors, don't have the time to do all that work.
yeah.
But it's
Well, that's
interesting.
why it's like we are doing it for all of our investors, right? And both on the
Mhm.
manual side and everything else, right? Like, and we don't charge significantly more than like a lot of normal property managers, right? So a lot of like the automation work is to keep some of those costs low. Like some of our advisors, one of like, oh, you only charge like 15% total, right? Like, don't property managers charge first month's rent and 10%? It's like even slightly more than you guys. And like a lot of our pushback has been like, we want to keep costs low for
Mhm.
the investors, and we don't like nickel and diming people, right? So we're very transparent of like, okay, we don't charge lease up fees. We only charge like one simple fee each month, right? So um, the number may look a little bit higher, but generally all in, like our costs are pretty comparable. So
Yeah, what I think when I look at that too, from a business perspective and investor, I would just look at like a matrix. Okay, here's me, self solo, everything I do. Here's a property
yeah,
manager, everything they do, and how much they charge me for that their services, such as
yeah,
the first month's rent, such as and monthly property management fees,
mhm,
vacancy fees, or anything else. And then how does homeroom charge? And the
yeah,
bottom line for me is what's a net number, right?
yeah,
And then if you can get me a higher rental rate and your
yeah,
cost is similar and I'm netting more money, then it doesn't matter. It's more now. So, okay, I need to build trust. The
yeah,
first question to
exactly.
me was, I talked to a lot of different co-living companies and rental companies. The first question is, what happens when you go out of business? If you do, then
Mhm,
what happens
yeah,
to my leases, the master lease, things like that?
yeah.
Then, if they
Um,
can't explain it, then it's okay.
yeah.
And then the next
Well, you
question would
you
be,
basically inherit the lease, so it's not a great like, we hopefully that will never happen, right? So we
mhm,
have a lot of funding, right, and, like, runway to make sure that never happens, right? So we, like, are pretty lean as a company. Um, we have almost $1 million in cash, right, that we, like, aren't really spending, right, just to try to maintain some of that confidence and stability there, just because like, um, it is not a great situation when co-living companies go out of business, and some of our competitors have, right? So,
yeah,
um
I
I mean,
saw
a
that
part of it is
too.
like, yeah, if other people were using a competitor, I think that's one of the things that like, oh, we can theoretically take on some of those leases. But yeah, um,
So that's a good thing because the goal is this, like as an investor, most I would say some investors they don't want to be active, they want passive and they want their time back.
exactly.
But at the same time, they want to know their property, their investment is in good hands with someone they can trust and like, and that
Yeah,
they'll do right. Because I seen
yeah,
some, I used to manage a lot of properties too, but I seen some before where some companies would just nickel and dime everything, and some of them don't even make sense. Like you're charging that much for that little work, and
yeah,
you came in a period of a month, you came like 3 or 4 times and charged for all those fees, then
yeah,
it just becomes ridiculous. Versus some
yeah,
companies are like try to be more fair, better price, sometimes better services, but at the same time they get too busy and now they can't manage as well because they're scaling too quickly.
yeah,
So there's a balance and you got to pay for that balance. You get what you pay for. If you paid for really
yeah,
low, the service is going to be pretty bad. And
yeah, yeah.
it's
That's
tough
fair.
as management.
Um,
It's tough to make money from it
yeah,
too.
especially trying to find the remote side of the business. Right? Like, we don't make like a fortune on the remote management side of the business, right? So it's like a lot of it is just like, okay, like we just try to make as much money and like pay like just the raw rental fees there and like the agent side of the business as well. But yeah, for sure. Um,
Exactly. And then, during this time period too, I think when I look at the business, okay, imagine HomeRoom has a really good, nice, easy website that's easy to track my properties, all the ones I own as a investor.
mhm.
I know what
Yeah.
they're doing. I'm getting status updates like monthly or quarterly regarding the property and what they're
Mhm.
doing. And when it looks good, it feels good, it's running really well, and it becomes more of a portfolio rather than a emotional investment. It just becomes
Mhm.
my real estate portfolio that's doing
Yeah.
well and I know is being managed well. Then it
Mhm.
feels good, but at the same time, on your end, it's a lot of work to
Yeah.
do that to make it look so simple, so easy, and like
Yeah,
what you.
yeah, we definitely are working on the automated reporting side of the piece. That's, like, one of the major feedbacks of, like, okay, we definitely need some of that.
Mhm.
I think in the next maybe, like, month or 2, we'll have something, like, fully rolled out. Right now, it's just, like, we just send people monthly updates because it's like, well, there's only, like, 120 houses, we can still do that, right? So,
Yeah.
um, but yeah, it's like as it grows, that's where we're gonna have to be like, okay, like, more self-service tooling, automated emailing, other things, so, yeah.
Nice. And then,
Uh,
talking about COVID and talking about everything, like, why did those other companies close down?
yeah, so I think one part of it was on the master. So we don't sign any master leases. So the master leases were kind of one issue, right? So the companies that have had to like take on a lot of the losses.
Mhm.
Um, most of our investors. So we do offer a master lease, right? But most of our investors are on just revenue share agreements, but we basically act as a property manager. Um, but we do off for every like lease we'll sign with a agreement we sign with the investor. We will include any amount, like a guaranteed amount that they can pick if they don't want to go with the higher like property management type model. So um, yeah, a lot of it was just like kind of had short-term cash flows issues. They were in a lot of these tier one markets. And I think what we've seen a lot is like when you're in those tier one markets, a lot of people with COVID sort of went to some of the like moved out a lot more than what necessarily happened in Kansas City and some of the tier two and tier three markets. But yeah,
Yeah, because as an investor, when you look at it, and I was looking at a lot of master leases, you see like for example, there's big companies like Star City, Bungalow,
yeah.
there's your
Well,
company, and there's
Star
other
City
ones.
doesn't exist anymore, but yeah,
And they
yeah,
look really good, right? Before when
yeah,
you looked at their model, it looked really
yeah,
amazing, like everything they're doing. But at the same time, like, can you sustain it that long? And what you're doing
yeah,
is that's a high growth, high risk, and really quick. And
yeah,
like Bungalow's model, your model, and other companies' models, and
yeah.
like some of them, I saw
Yeah, I
great.
was just talking to John from Star City maybe like a
Mm,
week ago, and we were always just talking about the business and how we can like make sure we try to avoid some of the like going too overboard on like the mega complexes. That's why we
mhm.
mostly tried to focus on like, okay, like can we just get the single family rental and get that model really working
Yeah.
before trying to get into like some very different form factors, right? So
Yeah, and I agree too. I think you're on the right track because when you go for single family homes, you're going for like easy, quick hitters that work, that has sustainability. And people always want that. When you go big, it's you go
yeah,
big or go home, right? And it's
yeah,
hard to
Yeah.
sustain that, especially with COVID.
Especially with COVID, when you have to like if you're in San Francisco and like you need people paying quite a bit in rent, right, each month, right, to like
Mhm.
justify some of those upfront capital and investments, right? Where like our average rent's like $450 a month, right? Like um it's easier to replace a lot of those tenants. Let's put it that way.
Yeah,
Yeah.
exactly. And I think some of the other different models I saw too, where it's like, oh, okay, we'll take this percentage and we'll do a split, like a 70-30 split, for example, on profits.
Yeah.
But the
Mhm.
problem becomes, okay, how when you from investor standpoint, how actively are you going to be watching my best interest and your best interest and finding the
Yeah.
right tenant versus finding the right tenant for today who will just pay you? And
Yeah.
then, at the end of the day, am I really netting more money and taking more risk or less risk? And I felt
Yeah.
like some of them felt like, okay, I'm taking more risks for the same money. I might as well just do it myself.
Yeah. Yeah, I mean, I feel like if you have good local investments, right, I feel like that's where it's like, oh, like I do a lot of it myself anyway, right? Just because I don't
Mhm,
think it's like uh, if you're close, it's not like a ridiculous lift, right?
mhm.
Um, at least what I found when I was COVID. When I like left and went back East Coast for 6 months, it became a bit of a nightmare to manage. So
Yeah.
and like my tenants hated me, and like a few people moved out, and I had to like constantly fly back here and like manage the thing. And it was just like not hands off anymore. Um, but like when I'm living here, right, like something like I need to find a new tenant, I just post a listing. Like like also the Bay Area is kind of absurd when it comes to finding tenants, right? Like
Mhm.
I make a Facebook Marketplace post and I'll get like 50 messages in like 2 days, right? So um, that doesn't necessarily. I mean, like I know that doesn't happen in like Dallas or Kansas City. I mean, that happens in Austin, but not that much in other markets. But yeah,
Yeah, and I think part of that too, like, for me, I do active investments, but I still like the passive. And the reason I choose
yeah,
more passive nowadays, just because, family, kids, time.
yeah,
I want the time back more than anything, more than the money. So I want the time and
yeah,
freedom, the real freedom, right? And the part of it too is, okay, yes, I can do it all, but at the same time, is it worth the time? Is it the
yeah,
effort or even the stress of it? As
yeah,
an experienced investor, it's fine to do it, but as a new investor, you might not want to handle all these things that you don't or feel comfortable with yet.
mhm,
And the next part of it too is like, yes, I can do that, but it's better use of my time to keep scaling, to find more property, to invest more, to make more money, to invest more, actively doing that side of things to grow. Because if I'm busy doing all this, administrative stuff, I'm losing this time that I can use it to grow my businesses, my investments.
yeah,
So
for
that's where
sure.
like other companies come into play, such as you guys and other companies, because hey,
Yeah,
you can offload all the stuff. We do all the work for you. We analyze it for you. We show you the numbers. We do all the services, connect you with the vendors, the right
mhm,
vendors,
yeah,
hopefully who don't charge you too much, and
yeah.
then we give you a better return, hopefully.
Yeah.
So it's the
Yeah, that's
balance.
like the main goal there too, especially, like, I think one thing we do differently is in, like, we just try to do a lot of value add in the co-living side, right? So if you can make 50% more rent, right, like, even if you overspend maybe, like, 2 or 3% on the purchase price, right, um, like, you'll make that back pretty quickly just from the higher rent numbers, right? So, one thing I think we try to tell a lot of our investors is just, like, the markets can get kinda crazy sometimes, right? So just try
Mhm.
to be, like, put in competitive offers, don't try to lowball too much, right? And, like, um, because the goal is to make, like, a lot of it coming out of it, right? Rather than, like, trying to save $5,000 on, like, the purchase price.
Mhm.
As a personal investor, I'm, like, not great with that. I'm, like, the type of person that always likes to try to save as much as possible when I'm doing my personal investments,
Yeah,
uh, but
and
yeah.
that's normal in the beginning.
Yeah, exactly, so,
And later you go, okay, well, I
yeah.
just did it
So,
myself. Man, I should have done it myself.
my agents don't love me, let's put it that way. Uh,
Yeah,
like,
I
I had
know
to
it.
fire some fired me as a client. Like, I like that like, during my last house search, there would be one like, "Oh, it listed for 1,000,000 and I want to offer, like, 800,000 in the Bay Area," right?
Yeah,
And they're like, "Fine, let's just waste 15 minutes of my time." But that's,
and
like,
I
how we got
get
a
it.
place, right? Because, like, I ran the numbers on a place, and it's like, "Oh, it's at 1.3, and I wanna offer, like, 1.33," and, like, "Oh, like, maybe that does make sense," right?
Yeah.
If, like, the place has some issues that, like, other investors are scared of, right? So, but
But that's the fun part of it too. As a real estate agent, like I work with different types of people and different
yeah,
personalities. I understand, there's super analytical people, there's emotional people, there's people in between it. And
yeah,
investing inside it's all about numbers. So I know even if you're writing an offer, sometimes it might work. You don't know unless you try. And sometimes
yeah,
even if I tell you what it's really worth, you might be able to get a better deal on it and just becomes based on
yeah,
terms. Sometimes like even
yeah,
today I got another one closing next week. We got a probably 75 under market value. because the
Yeah.
terms made more sense for the seller and for our
Mm.
buyer, and we negotiated quickly. But we understand what we're getting into, even as
Yeah.
a newer buyer, because they know the market's hot. But you can
Yeah,
also
I've
find things
especially
to
seen
do.
some of the stuff like fly homes, right? Of just being able to
Mhm.
like easily offer like cash equivalent offers and these other type of things of like, yeah, trying to make that doable. Um,
Yeah, because there's different types
yeah.
of sellers too, right? Not all sellers just want the highest price. Some of them want different things that you might not know unless you ask.
Yeah, one of my this was back in 2015, and like I lost out on the place just because like my offer was like $50,000 higher, and they took a lower one just because it was all cash, and like I don't know, I kind of got angry at the like the seller's agent from that one just because like I also like have done all the real estate classes and put in my own office sometimes, so it's like uh, yeah, I don't understand some sellers sometimes, but whatever.
It's price and its terms, and
Yeah,
even if
yeah.
one is this, okay, you give me a
Well, because like
loan.
I'm completely non-contingent, right? Like I'm like
Yeah.
already like waiving all the terms, right?
Mhm.
Like I don't know what you want, like I don't know. Like it's like
Technically, it's still not guaranteed, but
yeah,
you have a safer bet because it's
yeah,
non-contingent. At the same
yeah.
time, I know if you don't perform, you still can fight me for it, right? So a
Right,
cash
exactly.
offer
Yeah.
has no shouldn't have
Oh,
any
of course, right? But
restrictions.
like I don't know, like
But
I think
50K is a lot.
it was $50,000 is a lot of money though, right?
Yeah,
Like I get that for like 20 grand. I thought like you think for 50 people would at least like be willing to wait 2 weeks, right? But
yeah.
yeah. It's not,
But
and it's not like cash offers go away. They're usually still there. So
no,
like
they're still here even in the 2008. Even now, they're still here and they're not going
exactly,
away.
yeah.
It just
Yeah.
different volume of it, but yes,
Yeah.
I get it and I see it,
Yeah.
and we do win with cash offers, and
Yeah.
not everyone
Oh,
can
no,
do
like,
it.
that's what we learned if we just, like, found some hacky workarounds where, like, oh, if the, like, seller's agent really wants a cash offer, we'll do that, but it's gonna be, like, well, like, significantly less because the interest rate can get absurd, but yeah.
Yeah. But we
Um,
see cash offers at the significantly higher price point too.
yeah.
So
Well
those are fun too.
I just ignore those houses. I just refuse to get involved in bidding wars with people that have infinite money. So, yeah.
Exactly. So that's the point of it too. Like, okay, you just bid 150K over the market value. Everyone agrees, but you got it. Congrats to you,
I
and
mean,
that's what
like,
you
good
you need.
job. Like, I don't
That's
know, like, terrible investment, but okay, that's fine.
yeah, and
Yeah.
some of it's not investment. It's just their
Yeah.
personal home, and they don't care.
Yeah.
They're gonna be here for
Yeah.
the next 20, 30 years. It doesn't matter, and they're
Yeah.
still gonna make money because you think about
Yeah.
the market. Even in the last 2 years, the market went up
Yeah.
like crazy. There was no reason to go down.
Yeah. Yeah, my wife and I don't think of it that way, but I get it. So, yeah.
Yeah, and that's just has to do with net migration and people,
Yeah.
and then income levels in the area where they want to be
Yeah.
at in schools, right? So that's a
Yeah,
part of it
that's
too.
fun. Oh, yeah,
So
my wife and I have been thinking of moving to, like, a good school district in the Bay, and we just have completely given up just because like, we're just like, there is no way to do that without what we're paying. So, we're just, whatever, it's fine.
we
Um,
could talk about that, and really, for
yeah,
example, we can show you some examples based on your criterias and what makes sense. And it's really
yeah,
hard, but there is
yeah,
opportunity to be found. You got
yeah.
to find it and have the
Yeah, it's
right
more just
people.
there's so little inventory in, like, the good
Mhm.
school districts in California that just, like, makes it so hard sometimes. Like, we're like
Yeah.
the not good school districts, I feel like there's a lot, right? So, like, there's at least enough where I can put in an offer every week or 2.
Hmm.
But, like,
Yeah,
if
the other
there's
ones are
2
harder.
houses in Palo Alto for less than, like, $5 million, well, it's like and I wanna pay 2.5, like,
Yeah.
there's not much within the price range, right? So,
Mhm. We'll talk about that. We'll
yeah, yeah,
show you some
yeah,
examples. But
yeah.
going back to this too. Okay, how have the investors been performing? And then they're just getting paid monthly, quarterly, or how's that work?
Yeah, so paid monthly.
Okay,
Yeah,
just like
it's been
rent.
going pretty well, right? Because our
Mhm.
occupancy rate's pretty high. We don't charge them a certain amount, right? Like our NPS figures are like pretty good in like the 30 plus range for a lot of our investors, right? So we always try to constantly monitor some of that, right? We they can always reach out if they have any questions, right? We don't have like an absurd amount of them, right? Where we like can't provide some like the personalized service. So
Mhm.
um
And how about leases? Are you guys using standard lease agreements in the Bay Area, or you got in other
yeah.
cities too? Or were you guys using custom leases, and any
Um
issues that you ran
leases with
into?
the tenants or
Yeah.
like yeah, yeah, so it's pretty standard leases. It's, we will generally have, like, it's usually a year plus leases,
Mhm.
um, and we're pretty reasonable with, like, that type of thing, right? So we do, like, the background checks, we do some, like, rough credit checks and income verification to make sure they have, like, a decent job. We don't go too overboard, right? So if, like, they have a lot of income, we're usually pretty flexible sometimes on the credit score, but that's usually pretty rare in a place like
Mhm.
Kansas City, right? So,
Yeah.
um rough guidelines we try to give to like invest tenants is like, okay, like 600-ish plus credit score or like a pretty strong income, right? So,
Mhm.
or like a lot of cash savings, right? Like each person's a little bit different, but
And a
yeah,
part of that too, like when you look at leases and everything, you gotta, look at different locales and like different
yeah,
restrictions, requirements,
yeah,
additional disclosures, and putting this all
yeah,
together. But when you're doing it across multiple cities and states, it gets a lot more
mhm,
tricky. And then I guess part of
yeah,
your system would be
mhm.
to have this in place for each area, knowing your major factors to deal with.
Exactly, yeah, like, all
Yeah.
the leasing agreements are all generally standardized based on the individual markets, right? So we'll just
Mhm.
have people, like, they can automatically, like, once they apply, we'll relatively automatically approve the application and then send them, like, a lease agreement, right? So it's pretty
Mhm.
that part's pretty automated on that side of the business.
Nice.
Um,
Yeah.
and
And
the parts that
nowadays
aren't, we have, like, a
too.
large globalized team to, like, help lower the costs on that front, so
That's good. Yeah, because nowadays you think about it, everything can be done pretty much online now. Like, okay, you
yeah,
can do application online, you can pay online, you can ACH online, you can
yeah,
DocuSign all your lease agreements online. It can
exactly,
look
yeah,
really user friendly, and
yeah. All
the
my personal tenants
experience.
pay me by Venmo, right? Like,
Yeah,
it's yeah,
Venmo's a good one too.
yeah, yeah,
Venmo, you got to be careful that they're paying you, but of course you give them your phone number, your last four, and then they can
yeah,
Venmo you. And
yeah.
now, yeah, even today,
Doesn't
Venmo
really
can.
work with HomeRoom that well because you have to, like, match it up correctly. Well, we haven't figured that out quite yet. At some point, maybe, but, like, personally, it's easy, right? Just because like,
Mhm.
I only have 5 tenants, so,
Yeah.
um, like, first of the month, I can just go through manually and check 5, right? So,
But you still
um,
have to manage that. For example, as an investor,
yeah.
you're still managing your Venmo. Like, did I remember to check? I got paid all five people, and did they remember to pay me?
Oh, yeah,
Were my
my wife just, like, bothers me the 1st or 2nd of the month of, like,
yeah, check it up.
"Did we get all the money today?" And, like, then I just go through and check and, like, and then if not,
Yeah,
then I have to send people text messages or, like, call them and, like, because most people just forget is what I've
mhm,
noticed.
yeah,
Like, they don't, like, actively not pay you unless, like, something's seriously wrong.
yeah.
And, like, I try to have a personal relationship with my tenants, so, like, at least they would be comfortable, like, telling me if something's wrong. Um, but, like, yeah, so the company that can become kind of harder and harder to scale and do remotely, so, yeah.
Yeah, and when I think about that too, it's like, most people use apartments.com or Zillow for the property management because it's free. It used to be Cozy, owned by Google Ventures,
Mhm,
which apartments.com bought it. But the
mhm,
fact that you can do ACH payments directly, they can pay through debit cards, they can pay through the credit card with a fee. And
yeah,
it just, they set up automatically. So it's monthly coming in, and you can see all the P&Ls on it. And then you can
yeah,
even do maintenance requests. So another good thing with
mhm,
the provider is like maintenance requests. If they have maintenance
yeah,
requests, they can put the comments in, they can take
yeah,
pictures, they can leave messages, and you can see
yeah,
it and you can respond back. So you have tracking like a log saying,
yeah,
yeah, you told me about this, I actually fixed it the next day, and then you
yeah.
complained I didn't fix it, but I have proof. So that
Yeah,
helps
so
track.
we have, like, a mobile app for all the tenants that way they can use to submit all that and, like, also talk to the tenant talk to the people they live with and everything. So we add them to, like, a company-wide Slack channel,
Mhm.
um, with, like,
Nice.
all the like, with, like, pretty much everyone associated with the company that can get kinda crazy, but, yeah, like, a lot of it's, like, generally positive feedback, right? Like, it's, like there's always lots of complaining from tenants, right? Which
Mhm.
is, like the fact that there's, like, not that many with, like, almost 600 tenants, I think is always kinda crazy, but,
That's
um,
good. Yeah, you don't want it.
yeah,
That means the buildings, the properties are, well managed and well taken care of,
yeah,
then the less issues you have. If you had no issues throughout the
mhm,
whole year, it actually
yeah,
makes me wonder, is there something going on I don't know
yeah,
about because
yeah.
you had no issues?
Th There is, yeah, yeah, there's, like there's at least one every, like, couple weeks, right? But there's, like,
Mhm.
a lot of tenants, so it's, like, I don't think it's actually that many compared to, like, what I would expect,
Yeah, that's
because
good.
like, even my personal properties, I get pinged, like, a lot, right? So,
Yeah.
um, but maybe I'm not the best at maybe Home is probably better at fixing them than I personally am, so,
Mhm.
yeah,
Yeah, and before we wrap up too, is there any like, for example, you have co-living, there's Airbnb, there's, like, just, traditional rentals. Why do you find co-living that, like, why jump into co-living versus why not jump into Airbnb style
yeah, so,
homes
I mean,
less
I've been
than.
an Airbnb host for maybe 7 years, right? So
Mhm,
I don't know if
mhm,
it's, like, an either/or type thing, like,
mhm,
I think one thing is, like, just finding affordable housing on Airbnb can be, like, very difficult, right? Also, like, the management fees and management of Airbnb is, like, a lot of work, right? So, like,
mhm,
um, people don't really use it for booking longer term leases, right? So you have
mhm,
to basically just get a lot of people in and out, that can cause potential damage issues. It can cause, like, just a lot of management work, right? Like, Picasa and the competitors charge, what, 35 plus percent sometimes, so, like, that can always be pretty hard. Um, where we just try to have like a really stable level of income per room, right? But also more than just normal single family rentals, right? So it's kind of like this in between area where you have like the returns like an Airbnb, but the management like a single family rental, right? So um, it's kind of the like in between point we try to offer. So you get like the little bit best of both worlds there.
Nice. I like that because yeah, there's no right or wrong, and it just depends on active levels and performance levels and which one makes the most
Yeah,
sense, you know.
yeah,
And then seeing it because yeah, I have friends who do Airbnb. They're making great numbers, but I'm like, but you're flying back and forth. You're looking at things. You're talking and doing a lot more active work because you have a way faster turnover and a more
yeah,
risk in your area depending on which you buy versus a
yeah,
co-living. Okay, you have this less risk, but your numbers might be
yeah,
similar. It just depends. And
yeah,
then you have your own standard leasing where you're actively doing it or a
yeah,
property manager. And it's just all
yeah,
comparative relative to what
yeah.
they want. And
Yeah.
it's,
I mean, obviously, I love Airbnb, right? Like, I rented out an extra bedroom here for years. I was a super host for a while. Like, I'm like a
nice.
huge investor in the company personally. So, um, yeah, because I worked there for maybe yeah, about over 2 years, right? So, um, yeah, I mean, like, I think the vision that they're trying to do is just make it super easy to just like travel anywhere and live everywhere. Like, I've stayed
Mhm.
in some of like the best Airbnbs around the world. Like, I just wish that we could like have that type of similar experience, more longer term stays, right? I think that's what we're seeing is like a society being able to work from anywhere, live everywhere. And like Airbnb is okay for it, right? But like I don't know, like I feel like co-living would theoretically be better and cheaper from like the tenant side of things as well.
Yeah.
Um, like I want to go to Paris and stay a month, right? Like Airbnb is going to be absurdly expensive. Eventually, like we're not in any of these places yet, but eventually, like going something like HomeRoom, I can just like quickly transfer my lease and just live there as well. So
I
um,
like that. I
yeah,
think so too because yeah, nowadays you can travel and work anywhere. Great. I live in San Francisco, but I can work anywhere. Okay, I would love to live in Paris for a month, love to live in London and keep going around
yeah,
the world and
yeah,
having my lease be transferable, having the rates
yeah,
pretty similar. And I have even like setups where I go in, I know what I'm getting. I'm working with this
yeah,
company like HomeRoom. I know what
yeah,
I'm kind of getting myself into for each
mhm,
place, and it's easy. And
yeah,
I don't have to reset up my payments every single time. I have one platform to do all this work. It feels
yeah,
like a long-term Airbnb
yeah. So
at a better rate.
yeah, yeah. Like I think it's like the better rates. I think a key one, right? Because like you
Mm,
try to do it on Airbnb right now, it's just like I mean, you definitely can, right? It's just pretty expensive. So
mhm.
um, I was trying to be able to figure out, okay, how can we get some of those costs down? I think is like kind of the main thing, right? Like you can't find a room in Kansas City for less than like I think it was like 600, 700 on Airbnb right now, where it's like well, we have tons for 400, not tons, like 20 or 30 still open. Like a lot of houses there, most are full, but yeah, it's like still going to be like 450-ish, right? So, um,
Cool, and then how do people learn more about homeroom? How do they learn more about investing with you guys and see the kind of different, values, propositions, and performance numbers that you guys are, offering and,
yeah,
go from there?
yeah. Feel free to just reach out to me on LinkedIn. Definitely down to set up some time to talk. You can also just go to livehomeroom.com/invest, and we have all the information like there. So, um,
Nice, and any final tips for people for 2022 regarding real estate investing or using modern technology to build their
yeah.
business?
Not too much. Yeah, it's been super fun to talk to you about it. This is always great to learn more about what other people are doing in the real estate space. So.
Cool. All right. Sounds good. Thank you guys so much for being on our show today. We'll see you guys next time on the Truth About Real Estate podcast. Have a great day.